Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Friday, February 24th, 2023. Before we look at the charts, I just want to ask you to please click like if you would. Also, subscribe to the Wicked Stocks YouTube channel, share the content with friends and colleagues, and check out wickedstocks.com. We put out a daily SPY and daily Triple Q report, like the daily Tesla and daily Apple report. You never see it actually on YouTube. We put out 2 stock picks every single week. On Thursday, we put one on Home Depot. We also put out an update on Google and Microsoft, so forth and so on. Earlier in the week, we did Uber. So there's a lot going on at wickedstocks.com. We have a basic subscription price of $47. It includes everything, including weekly analysis in the S&P 500, NASDAQ 100, and the TLT, the ETF long bond. So let's talk the charts. Big picture, we work our way into the day. The big picture, having come off of that channel support in early January in the 80.60 to 92.30 area. The channel top to the channel bottom is 249.85. It remains a 2 to 3 month objective, following a settlement about a month and a week or so ago above this band of channel. Support was resistance on the way back up. We thought perhaps the market could fall off back into the 80s again within a month or two of testing the 150s. But as it turns out, positive earnings for Tesla launched us above this channel support. And now this is a meaningful base of support that can contain monthly, possibly quarterly selling pressures when tested, and above which 249.85, a realistic 2 to 3 month target, which we're over a month now into, and about 60% of the way there. So let's talk the day itself. I do want to mention that the rising 1/3 speed line and combination channel bottom today in the 193.45 to 196.25 area is considered 4-star support. 4-star support meaning multi-week containment. It can contain selling not only through next week and above which 221.25 is in reach by the end of next week, but over the next 2 to 3 to 5 weeks, that 249.25 long-term channel top that I mentioned here earlier. And so let me go back to this chart here. So let's talk upside today, actually. Holding above this 193.45 to 196.25 area will keep the market poised for recovery to 221.25 by the end of next week, I'll say. And as I said, by the end of March, 249.25. I'll mention as we're still looking at this image that if over the coming week or so we were to close above the 221.25 to 224.90 region, which is another area, then the 249.25 2 to 3 month target is then likely within just 1 to 2 weeks. 249.25 is a big picture, long-term resistance once again that can contain quarterly buying pressures. Possibly in the later year we could fall off from here in a meaningful way, and if settled above, would signal a good long-term low for Tesla. We should see continued recovery then on a gradual basis anyway into later year. Back to this image here. On the way up today, coming off of this low 190 support, we still have a short-term descending channel top today at 203.35, which I've reduced to an intraday resistance area only. Yesterday it was a little higher, session containment. We came close to testing it. We didn't, but we did back off a bit. 203.35. I have it as intraday only because of the significance of this 193.45 formation, which we tested actually on Wednesday. And so coming off of this, we can launch into a meaningful rally into the 221.25 area, as I say, by the end of next week. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. If we happen to push or open today above 203.35, Friday could be a meaningful rally day. The high settlement price from about a week ago, which is the high settlement price following the January low, is 214.24. And so if we push or open today above 203.35, 214.24 in reach, we could top out there for the day perhaps, but keep in mind That 221 and a quarter remains a 1 week objective, 249 and a quarter, a 3 to 5 week objective that could be narrowed to within just a week or two of closing above this 221 and a quarter to 224.90 area. So what does this mean for trading? You know, you're buying dips into the lower 190s, 193.45 to 196 and a quarter. That opportunity presented itself actually on Wednesday. And so if you're a day trader or a 2 to 3 day trader, 3 to 5 day swing trader, you're giving some respect to 203.35, but it really is for the 3 to 5 day swing trader buying the low 190s, anticipating the 220s, the lower 220s. And if we close today, even though it's just an intraday resistance level, I'll say that if we settle today above 203.35, we're probably 2 to 3 days away from reaching this 221 and a quarter level. 221 and a quarter is once again that long-term 3/8 Fibonacci against the all-time high November 21 and last January's low. We came close to testing it a week and a half or so ago. It can contain weekly buying pressures. It's part of a range up to 224.90 that can contain weekly buying pressures. And if we close above 224.90, not going to happen today, but by the end of next week, if so, then we're just another week or two away from reaching this 2 to 3 month target at 249.85, where long positions that may have been entered a month ago in the 150s or 160s can be liquidated, can be covered. You could consider going short in the upper 240s. I'll talk a lot about that at the time, what to do at that time. But know that if you are long Tesla, you may consider liquidating that position in the upper 240s. And if we close above 249.85, then you can get back on for the ride to the upside. But we're a long way from that right now. So back to this chart. If, and I don't see this happening, but you never know, if we break or open today below 193.45, this simple channel bottom that held Wednesday's low, then we could, by the closing bell, test 180.68, and that's right around in this zone here. So it's not outside the realm of possibility. That would be a high volatility day. I kind of think it would require an open below 193.45. I don't expect that to happen. So, you know, with respect to the directional dynamic as we continue into next week and into March trade, if we close today below 193.45, then we have a 2 to 3 week sell signal down to the rising 2/3 speed line, presently at 149.10. 149.10 is pushing into the 150s next week, and the 150s are significant because of that long-term channel structure that we settled above about 5 weeks ago. 150.174 to 160.14 converges over the next week or so. It's a gradual convergence. First, we converge with the first line of 150.174, and then about a week later, 160.14. So if we were to close today below 193.45, and if your time horizon is 3 to 5 days, 2 to 3 weeks, no good reason to be long Tesla. If you were bottom picking that low 190s, you should, in my opinion, exit that long position and look and find a way to go short. That could be buying 150 or 155 out of the money puts that don't expire. I'd go at least a month out. You might go several months out to preserve delta on the way down, and that would be a pretty solid trade where profits can be taken in the 150s and long entry at that point in time. Long entry through March, even through the rest of the second quarter, because keep in mind, once again, that holding above this 150s channel support, we could fall back to it and then come off of it again, and then we're back to a 2 to 3 month objective at 249.85. If, last thing I'll say, we were over the coming weeks to close below this 151.74 area, this market shows a meaningful, significant weakness as we move into March, April trade. I wouldn't be surprised under that scenario to see the 80s over the following month or two of trade, but we're not there. I'm not expecting it unless we close below 151.74. Until then, we're expecting 249.85 as a 2 to 3 month target, and we're a full month into it as it is, and about 60-70% of the way to reaching it. And that is all I've got for Friday's Tesla Report. Please click like, subscribe, check out wickedstocks.com. We offer a 5-day free trial, a money-back guarantee. I'll be back Sunday afternoon with Monday's Tesla Report. You have a great weekend.